Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saida. Very quickly on to where the Nifty is at. We're absolutely flat on the index, as has been the case for a better part of the day. We've also been very, very range bound, right? We've just traded in an 80-point band. And if I were to exclude that first maybe half hour of trade, it's been very, very range bound in terms of the market. So some positives, some negatives, and this is despite crude spiking, right? So plenty happening, and despite that, we've been resilient, if I can call it that. IT is one of those which is taking a bit of a knock, 0.4% lower. And when you're looking at the Nifty Bank, there is some bit of strength in the Nifty Bank, 0.25% higher on the Nifty Bank. Power Grid is your top stock of the day. In terms of the Nifty 50 index, the stock is perked up 3% in trade, a fresh order buoying the stock. You've got HDFC Life is the other one, 1.5% higher. Kotak Mahindra Bank has shown some resilience over the last few days, continues to close higher, 1.25%. BEL is up 1% as well. And Hindalco too up around 0.8% thereabouts. HDFC Bank also showing some resilience. You've got Interglobe Aviation as the top loser. That aviation data not really enthusing the markets. Trent is down 1.6, Maruti is down 1.4. The advanced decline is 2:3 on the Nifty. When you're looking at broader markets, also largely in tandem is the mid-cap index. The small-cap index is showing some outperformance, 0.4% higher on the small-cap index, so nearly 0.5% in terms of the gains on the small-cap. The Nifty 500 too is largely flat in trade. When you're looking at, the big movers, you've got Balrampur Chini, not surprisingly, 8% lower on that counter. Britannia is down 4. Credit Access is down 3.5. LIC Housing is the other one, down 3.25. You've got Cohance as well, which is down around 3.2%. So some movers visible there. When you're looking at the winners, and plenty of them, Welspun Corp is up 14%. Jindal Saw is up 9%. Aegis Logistics, Urban Company, IFL is up 7% as well. So some strength being seen in plenty of names across the board, but it's very stock specific. Car Trade is up 6.5. There's no real theme which is playing out. Sugar, of course, is one of those themes playing out. Car Trade is one which has played out and continues to do well. But otherwise, you're not seeing a secular theme which is doing well. In terms of sectors, let's just quickly pull up that chart of sectors. And metals is the leader today, 0.8% higher. FMCG is the big loser, 0.8% lower. Pharma, auto, consumption, IT all down 0.5% odd each. Realty is up 0.5%. Defense is up 0.4% odd. So it's a very mixed bag. Energy is up 1/3 and the like. But let me go across to Avi. He's here with stock-specific action and why some of those stocks are buzzing. Avi, good afternoon.
So let's have a look at some of the stocks that are buzzing in trade, starting off from the sugar sector that is seeing some strong profit booking after a very strong rally of around 10 to 30% over the past few days. That is on account of news that the government has now allowed 1 million tons of sugar import at zero import duty. So that is done to ensure good availability of sugar supplies and to cool off the domestic prices. Up next is Satwik Green Energy that has won a 190 crore rupees order for the supply of solar PV modules, and that is the reason the stock is seeing some good buying. Up next is Railtel that has won a stock order win of around 165 crore rupees from the Western Coalfields, and that is to be done over a 60-month period spanning up till 20th September 2031. So that is a big order, a moderate order win for Railtel, but the stock is up on basis of the order win. Up next is Neogen Chemicals, and the stock is seeing some selling pressure as SBI Mutual Fund has reduced its stake by selling around 2.11 lakh shares, equivalent to 0.74% stake in the company. They have reduced their stake from 6.8% to down to 6.08%. Our last pick would be Amagi Media Labs that have announced a 600 crore rupees block at 550 rupees per share. That will be around 4% discount to yesterday's closing. And likely sellers are Trudy Holdings, AVP Fund, Axel, and also important to note that there will be a 90-day lockup for the sellers in the block. So that is the reason the Amagi Media is also up in trade, and these were the stocks that were buzzing in the trade for today.
Okay, all right. So that's the tilt. And thank you, Avi, for that. Let me bring on board Kunal Bothra. Kunal, markets have held up fairly well in trade today. More positive than negative?
Yeah, of course, more positive than negative. And I think given the way the markets bounced back yesterday, the supports which the markets are holding on to a flattish kind of a zone for the Nifty, slight outperformance for the Bank Nifty, the sector composition being a lot more stronger. I think that generally indicates that maybe we are looking at the markets just about trying to digest what happened across the globe, and then going into the expiry week on the slightly bullish expectations.
Okay. Sector tilt, Kunal, what do you expect in terms of which sectors to outperform?
So defense is something which I've been highlighting over the last few days, continues to look attractive. You've seen a good bounce back from many of the defense names today, right from the likes of Bharat Dynamics, HAL, BEL, etc., towards the non-FNO stocks also, which have seen very good pickup in terms of price action. Power stocks today, I think, could be something to watch out for, because I think for the first time in the last many weeks, we've actually seen names like Power Grid, NTPC, Tata Power, etc. I think trying to show some intraday good comebacks. So we'll wait for maybe another day or so. If these stocks see a follow-through up move, say start of the next week, then that could, I think, be a interesting theme to watch out for, because most of the power stocks in the traditional power names, they've been beaten down significantly over the last many months, and it looks like that these stocks had come back into an oversold territory. So we need to see whether it's just a short-lived bounce for these stocks or whether it's a trend in the making. Hopefully, start the next week, we'll get those answers at least on the charts.
Okay. That's the tilt. Kunal, top stocks that you'd bet on?
So looking at the current charts, I would look at two buy calls. The first one is one Bharat Dynamics, something which I've been bullish on earlier. Looks attractive. The reason why, because the stock has now come back above its swing pattern breakout, as well as it's now trying to challenge back again its 200 moving average. So that is something which looks attractive. Would look out for targets in the range of 1425. Stop loss could be kept at 1320. The second would be a Ban Prestige. Now I was highlighting the stock sub the 1600 levels, 1585.90 approximately a few days back. That this has been one stock which has corrected by 10%. Looks attractive at the current juncture. Expecting the stock to come back into a decent revival. 1665 as a target. Stop loss at 1600.
All right. That's the tilt. What we'll do is slip into a very short break, as we always do. On the other side, we'll have Nirav Sheth joining us. He's from MK Global Financial Services, needs no introduction, giving us his perspective of, one, of course, earnings, but second, there's just so much happening in the global marketplace, getting a sense as to how he's looking at the Indian market at this point of time afresh, given all the risks as well as the kind of numbers that we've posted, which has been far better than what the street was penciling in. On the other side, we'll have Nirav Sheth. Stay with us. Welcome back, and we're joining you live from the Suzlon studio here at ET Now, and I'm joined by Nirav Sheth. He's here to give us his perspective of how do you see markets at this point. And Nirav, it's again the global geopolitical environment continues to be volatile, right? And as a result of that, you're seeing again crude behave in a choppy fashion. But I believe that businesses have started to evolve and have started to get accustomed to this as the new normal. You believe that the effects now will be far lower, and crude at 95 or 93 and change should not really bother the street per se?
Well, I will not say that it should not bother us.
Okay.
That is one of the trade. So, the big companies that will be negatively impacted, you have to take price increases, and obviously, there consequently, there could be some dip in volume and stuff like that. So, yeah, it is just companies adapt in terms of curtailing their cost, in terms of their.
Nirav, I have you on a very patchy line, Nirav. So what I'm going to do is take a bit of a pause on this conversation. I'm going to get this repatched. And while we are at it, curious to know, with regard to Kunal, your view, how should one look at some of the big movers today, right? A Welspun Corp up 14%, 10% higher on Jindal Saw. How are you looking at a couple of these names which have done extremely well in trade?
So I would actually believe that this could actually be a good time to try and book profits in the likes of Welspun Corp. The stock has moved up massively over the last, I think, 6 months or so, almost like a 3x jump from 710, 715 levels to 2300 approximately, where the stock is trading right now. So after that kind of a sharp rise, as well as today's gap up and that exceptionally strong volume, I think this could actually be a good time to try and book profits over here. Jindal saw, on the other hand, this could probably be potentially a breakout move. Today's candlestick pattern so far is what we typically call it as a bullish Maru Bozu candlestick pattern. The volumes today are at a multi-day high. The stock has come back towards a multi-week, multi-month high at the current level. So it looks attractive, and the stock can see a follow-through up move. Expecting the stock to maybe come back towards the range of 310, 325 over the near term.
You also sounded bullish on power, Kunal, when we spoke earlier a few minutes ago. How do you bet on power, and what do you make of the move on power grid? It's not often that we see this kind of 3% kind of move on a power grid.
Exactly. I think that's one of the major reasons why I would believe that maybe this could be a signal that the markets are now trying to look at the power stocks as interesting bet, because what's actually happened is that power grid has tapped into this territory of 250, 260 thrice in the last 1.5 odd year. So 2025 start, the stock was at 250 levels. 26 start, the stock was again back to that 260 mark, and now we are back again to that 260 levels from where we've seen a bounce back. In the two versions of the bounce back earlier, the stock had moved towards 300, 320 approximately. So from those 250, 60 levels to 320, it's almost like a 20% up move for the stock price. So after this price uptick, there could probably be a case that the stock may come back into this kind of a bounce back mode. Of course, the time frame could be a little bit more extended. It takes at least 6 months to 9 months for the stock to show that kind of a bounce back. But the only caveat is that we need to see a follow through up move for the next couple of days, because if this is not an expiry related move, then I would believe that the stock can sustain this uptrend and head back towards the 300 plus mark.
Okay. What we'll do is take that quick break, come back, we'll hopefully patch Nirav Sheth by then. He'll come in, give us his views with regard to markets. Looking forward to that conversation actually. Stay with us. Welcome back, and we have with us Nirav Sheth of MK Global. Much awaited conversation. Nirav, thank you so much for joining us.
Thank you.
Nirav, you were giving us your perspective. All the uncertainty, you were saying that it does bother you to some extent. Give us your sense.
Yeah, so in a sense that, the fact that it impacts my current account deficit and inflation expectations and rupee depreciation, that's a very, very vicious circle, right? All the problems that have happened in India essentially only flow from the current account balance or the trade balance. So we need to be conscious of that. You are not at a level that will seriously worry you, but is there a clear line of sight ahead? Probably no, but we live with that. There are bigger problems. You also have bond deals which are making, decadal highs and all. So that's the fun. You deal with all these things.
And with regard to the sector churn, as well as small, mid versus large, as well as the Nifty call, Nirav, give us a sense. How should one look at those three metrics? One, the Nifty call, small versus large, and the sector churn.
Right. So let me come to that, right? So let me just try and give you a hypothesis of what I'm working on. Today, when I look at the 30-year bond deals, they are trading at about 5.3%. So this is risk-free US dollar return, which means that anyone trying to look at investing in Indian markets, you will pair that up with equity risk premium, which is about 3 or 4%. And there's rupee depreciation. I don't think anyone will look at India at less than 12 or 13% dollar returns, which means that if my earnings are not compounding at 15 or 16%, it doesn't make sense for bulk of the FIs to look at India as a market. And that should be the construct of the portfolio, the way I look at it. And thus I come to the question that you asked me. I believe that Nifty 500 will outperform Nifty 100, Nifty 100 will outperform Nifty 50, because that is simply the earnings evolution. The broader markets are growing faster. The companies that are in the broader markets are growing faster, maybe because they are smaller, but that is the construct of the market. So I expect what is playing out in the market right now will continue over the foreseeable future. The problem in Nifty is lack of earnings growth, right? So you got IT, which the best case estimate is mid-single digit earnings growth rate. You got banks that are compounding at between 12 and 15%. That is the best case scenario. And therefore, it boils down to companies that you like. You're talking about something like, you've got Eternal, for example, where you expect earnings to compound at 30-40% for several years in a row. And yeah, so that is the way I look at it. You have to chase growth.
Got it. Chase growth. Sectors, Nirav, that you're chasing growth in.
Yeah, so within banks, for example, again, you look at the mid-cap banks, again, the threshold being 20% is growth rate. You look at NBFCs, we are very bullish on platform companies. And this is my personal belief, I may be completely wrong, but I think there is some sort of disconnect in the market. They tend to look at unit economics, and some of them think that, these are loss-making companies, and therefore, they're bubbly valuations. We have a different point of view. We believe that, they've got phenomenal moats, and I think you will see a lot of these companies making very, very serious return on capital employed as you move forward. It is just that a lot of the expenses, or if you look at old economic companies, a lot of what they put in on the ground actually gets capitalized, and it becomes a part of the capital employed. For all these new age companies, they tend to get expensed out, which is why when you start making profits, you will have very, very high ROCs. So, you need to make a bit of judgment over here. And then obviously, you've got these big opportunities in the supply chain of data centers and, eventually power utilities. We like this space.
So, Nirav, just the fact that there is no growth, let me play the theory of an elimination now, would keep you away from private sector banks to a large extent, would even keep you away from large cap IT? Would mid-small IT feature at all?
I am very negative on IT, right? So I am firmly of the view. So I can be completely wrong, right? So I believe the sector is getting disrupted. People are talking about the fact that every time you got a serious deflation in the cost of IT, the volumes will expand. They call it Jevons paradox. Again, to me, we are not very sure. So certainly there will be an expansion of the demand for IT services. You're not very sure where the profit pool of IT will move. There could be new competitors. It could move away from what the Indian IT companies are serving today. So for me, if I was fund manager, I'll probably run a zero weight on IT. Within IT, certainly the mid-cap IT is a better place because at least they seem to be growing in mid-double digits, the likes of Persistent and Coforge. The expected, I think the guidance again was about close to 15-18%. Relatively better place, but that is when you put a gun to my head. To me, it's very difficult to try and I'm a great believer in AI, right? So I'm not talking about the valuations, but the fact that the technology is profound, and therefore the way we look at it is that people who are on the wrong side of AI, it is easy to figure out who is going to get impacted, and you just stay out of that. Do you really care about what the print media is doing? I distinctly remember 10-15 years back, and I was a media analyst, and people used to talk about the fact that no, you've got vernacular languages, nothing will happen to print media, let the broadcasting come. Nothing works. When a sector gets disrupted, it gets disrupted. X growth valuations are very, very poor.
No, point taken. So you play AI. You play AI through power to some extent, I believe. Industrials to another extent. Then
Yes.
there's IT and hardware technology. Maybe that's the third way in which you play AI. But where are valuations and where is risk reward the most favorable at this point, even within these probably pillars? And if there's something I'm missing, please add, Nirav.
So I agree. So I'm not saying, for example, you can always argue that valuations are ahead of the story. Sometimes the stories are ahead of the valuation. To me, when you are running an institutional portfolio, the only way you can cut the risk is by cutting the size of the bet, right? So if I like a particular theme, I think the valuations are not really in favor, then I probably start with an underweight position or a mild underweight. Because let's be very clear, it is not that you can forecast something with a great level of certainty. This is no longer the world where you can take a 10-year view because you have no idea what will happen in 10 years, right? And I can say this very, very confidently. I mean, look at this company called Ather, right? It got listed about a year back, and our understanding is that it was struggling to get the IPO through. They have to deep discount, and the stock is up 4 times from there, right? And for the entire sector now, the volumes in demand are ahead of the supply that is there in the market. So that is the nature of the market for you. And you could not have predicted the fact that the consumer behavior is going to change because you've just had a very, very marginal increase in diesel prices or petrol prices. The stock has gone bonkers because the demand has gone bonkers.
No, but that makes a lot of sense, and in fact, I would say a lot of the companies would want to at least the new listed companies would want to pull out a leaf from that story, right? But Nirav, talk to us about the new listings. Anything that's looking interesting? The quantum of fresh paper coming at us is humongous, right? And that is the other thing which is keeping a lid on the markets making any substantial move upwards.
Yeah, so and it's completely fine, right? Because you actually want money into the company. That money eventually gets reinvested, higher capex and stuff like that, and that is the beauty of India, right? So we don't have those $1 trillion companies which have globally adaptable business models. Let's accept that, right? But you do have huge amount of opportunities, huge amount of niche opportunities there in India, right? And it's great to see that you've got vibrant markets. But let me also make a point, right? Because we are running a couple of IPOs right now. I think Biharilal got listed at some 70% premium, I think a couple of days back. The investors have become very smart. They have become very demanding, right? So I think that one of the reasons that you're seeing a very successful IPO market right now is because the valuations are very appealing, right? And which is good, which means that it's a win-win situation for both the companies as well as for the investors as large. So I think, yeah, so, I'm not too worried about the supply in the market, and it's good for the economy at large.
Nirav, what you're suggesting is stick to new age. Specific stocks will continue to do well. Quality and value haven't really worked as much, right, Nirav? And you're also saying that FI investments coming into India will still take some time. But what do you make of the themes? When does themes like quality, value start to come back, in your opinion? Everything can't be flows, right?
Yeah, so anyway, I'm not a great believer of that you buy stocks trying to predict where the flows are going to go because this is you need to differentiate between the cause and the impact. It is actually earnings that drives the flows, and it's not the other way around. The limited point that I was trying to make about the quality, the only point, the way I look at it is that you cannot have, no matter what the quality, finally you are discounting cash flows, right? And if you've got some companies where the free cash flows are growing at about 6 or 7%, and if you are trading at 50, 60 Ps, you cannot make money. Life doesn't work that way. It works for a period of time. And that is how that, if you want to call that synonym, that the bark trade started working for a while. And then something that works for a while has got its own momentum and it works till the time it doesn't work. But at least my understanding is that you had an unusually low bond yields in the world. So from you go back to 2010 to 2020, your bond yields came down to percent. In some of the cases, you had negative nominal yields, right? That is a time that, it makes huge amount of appeal because these companies obviously are almost risk-free in terms of their earnings outlook. When you buy Hindustan Lever or buy an ITC, right? But when you got 4 or 5% cash flow yields, it becomes very appealing when my risk-free rates are 50 basis points. That is not the world that you are living in right now. Right now, we got 30-year bonds that are trading at 5.3%. And I also believe, and that is not because of inflation, right? Because the reals have started moving up. To me, it is probably telling you that there will be a huge surge in productivity because of AI. There will be higher real growth rate. That is my understanding. I may be completely wrong. But given the construct of bond deals at that 20-25-year highs, it is not that try and venture and be buying companies which are growing at 6 or 7% and trading at 40-50p. I think they'll flatten out over the next 5 years. I feel very confident of that.
That's how you think of it. Maybe value will continue to underperform, just given the fact that you've got bond yields which are going to be higher for longer. Nirav, thank you
No,
so
not
much.
value. So, sorry.
Right.
No, I'm
Please
not
go
talking
ahead.
about value. I'm talking about something that trades at 40-50p. That can't be value.
Fair point. Okay, yeah, but higher dividend yields may not be justified at this point of time. I think that's the message you're driving home.
Absolutely.
Perfect. Nirav, thank you so much for joining us. Super chatting.
Nice talking to you.
Thank you. All right, what we'll do is step into a very short break, come back, plenty to speak about. Stay with us. Welcome back, and onto an ET Now exclusive. Power Grid has won a major 26,000 crore high voltage direct current order from Barmer. Avi here with all of the details on this one. Stock spiking 2.5% on the back of that. Avi.
So big news coming in for Power Grid as sources exclusively tell us to ET Now that Power Grid has won a 26,000 crore rupees HVDC Badmer order, and this order will take the total order book from 1.75 lakh crore rupees to 2 lakh crore rupees, and this is a very big and huge order win for Power Grid. This is also this comes at a total cost of 26,000 crore rupees is what the Power Grid has won, and as per the committee the cost was around 25,000 crore rupees. There were other bidders as well, names like Rezonia, which is Sterlite, quoted 41.7 thousand crore rupees, Adani Energy quoted 42,000 crore rupees, and EnerGrid, which is promoted by IndiGrid, quoted around 46.7 billion rupees. So Power Grid emerged as the L1 bidder, and this is also positive for the equipment companies. And Power Grid is already executing one HVDC project in Khavda, Nagpur. This is also positive for the equipment companies, and it will be likely beneficiaries will also be Hitachi and GE Vernova T&D. So Power Grid coming in with a huge order win of 26,000 crore rupees for a HVDC Badmer project.
Okay, thank you so much for that, Avi. Kunal, we've covered the power names and what you seem to like within the power space. I'm trying to understand from within the renewables pack, is there something which is standing out? Because there's so much chatter that renewables haven't made big moves. Is this a segment which is poised to make a move, and any specific stocks that you're looking at?
Nothing such on the charts, frankly, Harsh.
Okay.
Nothing emerging on the charts in terms of a potential turnaround. I think the signals which we generally wait out for in these sectors are either there is like a fillip in terms of the price action, or volumes, or indicators coming back into a breakout mode. Nothing as such are emerging on the renewables.
Okay, all right. What about IT, Kunal?
So I think IT is taken a bit of a backseat. We've seen the last couple of days large cap IT stocks taking a bit of I would say a price correction or a cool off in the short term sense. But I think this was warranted because of that. I think a 3,000 plus point of move for the Nifty IT index. We were almost at 26,500 mark for the Nifty IT index. Start of the month of July, we had moved up to that 29,000, 30,000 plus mark for the Nifty IT index, and now we're trying to just about navigate around the 30,000 levels for the IT index. And in the process of doing that, you're now seeing large caps, few of the large cap names taking a bit of a slightly higher degree of correction, but the mid cap IT stocks are still looking strong. So the larger construct view on the IT stock still remains on the bullish side, but it's just that now you have to be a little bit more choosy if you have to try and play the short-term trends from these IT pack.
Okay, all right. Sugar stocks, that's the other story which is playing out today and has played out all week, in fact. And amid the sugar price hike row, the centre has asked the states to ensure the compliance on holding limit is maintained, failing which strict action will be initiated. Kuldeep here with more details.
Amid the rising prices of sugar, the centre has asked all the state governments to ensure strict compliance of sugar stock holding limit. We must tell viewers here that the union government on 19th of August issued a notification tightening sugar stock holding limit. As per the notification, bulk consumers using more than 10 metric ton of sugar per month cannot hold stock beyond 15 days of their requirement. Now, the centre has written a letter to all the chief secretaries, and it has asked states to put in place mechanism for periodic physical verification of stock, and also stated that non-compliance shall be viewed seriously and strict action under the provisions of Essential Commodities Act 1955 shall be initiated against defaulting entities. So we must tell viewers here that the union government has been taking multiple steps to control the prices of sugar. As we know that the prices of sugar have increased by more than 20% within a month as per government data. And as per some reports, at some places the prices of sugar have in fact increased to nearly 40%. On Thursday, the government has also approved duty-free import of 1 million tons of sugar, and this exemption will remain effective till 31st of the October. So these are the steps that the government has been taking, as we know that we are heading towards the festive season, and in view of that, the government has been taking these steps to control the prices of sugar. In fact, as per ISMA's data, this year's sugar production was at 280 lakh ton, and the production this year is 5% lower than the estimates.
Thank you so much for that, Kuldeep. Kunal, sugar, you're seeing a bit of a correction. Do you buy the decline?
Yeah, I think we were anticipating this because after this 20% up move for Balrampur Chini and then a 10%, 8% up move for few of the other names, you're bound to see some bit of a correction or cool off into the prices. And these are part and parcels. These are routine trends which happens into stock prices when they run up, quite swiftly or very quickly into their breakout zones. But what the move yesterday does for many of the stocks is try to channel back these stocks into a new regime in terms of a price trend. Sugar, we all know that is a seasonal kind of a sector, and wherever we've seen historically that sugar stocks have managed to give a breakout for themselves, the breakouts have lasted for few quarters at many points of time. So we are looking at a point where the sugar rally could probably extend itself over the next many months, and traders who have to position themselves have to try and do it in a staggered approach and not buy the stocks specifically on days like yesterday.
And what about textiles, Kunal? That's the other pack which has done very well for itself over the last 3 to 4 odd months. Can the rally sustain really in textiles?
See, for some of them, it should. In fact, largely I would believe that these stocks have done very well for themselves in the last 6 months. Now, we were discussing this point for Welspun Living some time back. Arvind Mills has done reasonably well. Raymond, as a larger constructor, has done exceptionally well. There are so many of these stocks which have run up, I think, around 50% to 100%, for example, in the last 6 months or so. Now, after such kind of a steep rally, you're bound to see a 20% kind of a correction into these stocks broadly from their swing highs. So the larger construct for the textile stocks would be bullish, but it's just that when you see stock prices rising up by 50% to 100% in a span of 6-8 months, it's always better to try and wait for a correction to come by. So I think textiles could be a good play, but then buying on corrections, at least a 10 to 20% correction from the swing highs should be a better strategy.
Okay, a 10 to 20% correction from the current highs. Stocks though, Kunal, if you can give us a perspective, which are your favorites within the textiles? What should you keep on your watch list?
See, I think, for example, Arvind is something which looks attractive. The stock has done, as I was pointing out, there are a few stocks which have doubled in the last 6 months or so. Arvind has done that from 300, 350 levels. The stock recently went up to 600 plus mark, is now corrected back towards 540 levels. Maybe I think sub the 500 levels, this could be a good bet. GHCL Textiles is something which I've been keeping an eye on. Interesting chart. The stock again had gone up from 65, 70 levels to almost 120, 25. That stock is now starting to show signs of slight bit of a correction. So if it comes back to say 110 odd levels, that could be a good point to try and initiate a buy. So there are many of these names which are looking attractive. Broadly, as I said, 20% correction is a good starting point.
Okay, Narendra Solanki also joining us. He's from Anand Rathi Shares and Stockbrokers. Narendra, great having you. We're just chatting about textiles. Also, Rajesh Palviya joining us. Good having you here, Rajesh. Let me start with Narendra first. Narendra, we're just chatting textiles. How do you look at the sector as a whole? Is this Is this turnaround of sorts more structural in your opinion?
Yeah, definitely. I think the sector is looking shaping up a good momentum, and also if you look fundamentally, the kind of trade deals we already have, especially the UK trade deals. So those trade deals are adding to the tailwinds of the sector, and the cost inflation is also largely has already run through the sector, and I think the volume should pick up going ahead in next 2 to 3 quarters, and especially we would be seeing good traction building up on the earnings front. And coming to the textiles, we are also positive on man-made fiber and technical textile kind of space also, as well, wherein we are seeing a lot of technological upgradation happening, and the use cases like use in defense and use in infrastructure projects are rising. So from that point onwards, also we are very positive on picking up volumes, especially in both these segments.
Let me also quickly quiz Rajesh. Rajesh, one quick question with regard to the index. What's the call now?
So some recovery is taking place, Harsh, and looking at the recovery still towards the end of this expiry, I think Nifty is likely to consolidate around the major call concentration area, which is placed at around 24,250 to 24,300 zone. So, which is very immediate resistance based on the call concentration area. If at all ahead of monthly expiry, if Nifty able to take out 24,300, then we could see, some short covering action to play out towards the expiry. But looking at the data setup, we believe that, maybe we could remain in the range only on the downside. 24, 100, 150 are the support area, and 24, 300 is the resistance area. So maybe we could remain in this range for next couple of days. Bank Nifty is attempting to, penetrate, major supply zone, which is at 57,700, 800 zone. If at all Bank Nifty crosses 57,800, I think here we may see some short covering action, as some of the private sector large cap bank have shown some buying action from the lower level, and that has helped the Bank Nifty to, negotiate with its resistance area. So any breakout above 57,800 can take Bank Nifty further higher to 58,200, 300 zone. At this juncture, one needs to trail stop loss around 57,300 to hold the long position.
Okay, those are the levels you look out for, and that's Rajesh's view on the Nifty. I need to slip into a very short break, come back, plenty to speak about. There's Narendra, there's Rajesh, there's Kunal. We'll chat more on the market on the other side. Stay with us. Welcome back, and we're in conversation with Narendra, Solanki, Rajesh, Palviya, as well as Kunal Bothra. Rajesh, let me come straight to you. Try and get a sense, what are the sectors that you're looking out for in terms of what could be the outperformers in the coming week?
So I think it's a expiry week for August series, and I think looking at the overall month performance, I think auto would be a one sector where one can focus on. Here we may see, some more upward momentum towards the end of this month. So for next week, I think automobile is one sector where we are focusing, and from that space, Hyundai Motor is looking attractive, and we are projecting target of 2300, 2350 on the downside. 2150 needs to keep as a stop loss. From the two-wheeler space, I think one can focus on Hero Motor. Here also we could see some upward momentum towards 5850. On the downside, 5600 needs to keep as a stop loss. So automobile is looking promising, and new age companies are also showing sign of strength. And I think from here, Eternal could be a one stock where one can focus on, and we believe that this stock can extend gain. 340, 345 would be the upward target in the continuation of this up move. On the downside, 316 needs to keep as a stop loss. And some of the pockets where we have seen, accumulation activity throughout the month, and the sector which could outperform in the coming month would be capital goods space. And I think from that space, some of the stocks where one can focus on stock like BAL, Keynes Technology, BHEL, these all stocks one can focus on, and I think here there could be a chance that we may see a good up move in the coming series. So capital goods is one space where we are focusing on for upcoming series.
Industrials, positive on industrials. IT, Rajesh, that's been the top laggard this week, nearly 3% on the index itself this week in terms of a move. We've seen a rapid move on the index in the month of July. August hasn't been as kind to IT. What next?
So Nifty IT, we have seen, yes, good run up, but large cap IT stocks are still struggling to cross their major supply zone on the near term, short term chart. Nifty IT index itself, not able to take out 32,000 level. So that was the major challenging level on the higher side. So until that breakout not takes place, I think Nifty IT index may remain in the range only. But from IT space, I think some of the mid-cap IT stocks are still doing good, and I think one can focus on mid-cap IT stocks like Coforge. Here we may see some more, upward momentum and possible rally towards 1950 to 2000. We could see in the continuation of this up move. So Coforge is one stock where we are focusing, and one can buy and accumulate. I think another stock from that space would be from the mid-cap IT space, and I think on the lower side, some accumulation activity has been visible in Tata Elxsi also, and stock is trying to negotiate with its 50-day moving average. So any breakout above 3750, 3800 can take this stock further higher. So one can focus on this stock also with stop loss of 3620.
Top picks, top bets, Rajesh. What is it that you're looking at in terms of stock-specific bets?
So I think at this juncture, Keynes Technology is looking promising. Keynes Technology managed to give breakout on the near-term, short-term chart, and we are expecting target of 4,100 to 4,200. On the downside, 3,800 needs to keep as a stop loss. Another stock that we are focusing on the automobile space, that is Eicher Motor, almost consolidating near to its all-time high trajectory. And we believe that once a stock able to take out above 8,050 mark, here there is a possibility of another 200, 300 point rally. So we are projecting target of 8,300 to 400 for Eicher Motor. On the downside, 7,870 needs to keep as a stop loss.
Rajesh, thank you so much for coming in and giving us that perspective. We'll let you go. Thank you. Okay, Narendra, just very quickly, trying to get a sense, EMS as a pack has come back into focus because of the scheme which the government has put out and the approvals that have come recently. How are you looking at the space as a whole? And we've seen a very strong run-up. Say a Dixon Tech was not too many months ago at 10,000, currently sitting around between 13 and 14,000 apiece. How are you looking at the entire pack and your favorites from within that pack?
Yeah, definitely. EMS has been a very good long-term theme, and we are still positive on this theme. However, in the short term, because of geopolitical volatility, there may be some supply chain issues which may increase some raw material costs, etc. But if you are really looking out for a long-term return, then I think 3 to 5 years is the kind of timeline which one should be focusing on rather than driving a very short timeline. Now, coming to the stocks, so Keynes again is one of our favorite. Plus, Dixon is another stock which we are very positive on, and the CG Power, another space wherein it is building ASAT capabilities. So these are the three stocks which we like in this space.
All right. Any favorites for you, Kunal, from within the EMS pack?
See, I think Keynes is something which starts to look now a little better because the stock which was earlier very volatile is now trying to make a third or the fourth attempt towards breakout the 3,900 mark. Today, I think the stock so far has managed to successfully scale above those levels. But this is something which looks attractive. Dixon Tech, Sirma SGS, etc. These stocks have done very well for themselves over the last 2 months or so. Sirma SGS had come back towards lifetime high levels. Dixon Tech, I think, had come back recently towards the 200-day moving average breakout. So both these stocks have done reasonably well. Difficult to give a buy at the current levels because of the recent price uptrend. But I think in terms of a fresh breakout, if I have to peg, then I would look at Keynes Technology.
Okay, Keynes Tech, that's the one. I think both Rajesh as well as Kunal liking that one on charts. The stock has seen a very decent rally. If we can pull up the 1 week chart on the stock, that'll also give us a sense as to how it's played out this week. I think it's done very well this week for itself. There you go. That's the 1 week chart. Okay, 4% move on the 1 week chart as well. But from the lows of the week, we've recovered very, very well for ourselves. Okay, so that's on Keynes. What we'll do is slip into a break, come back, plenty to speak about. We'll also start getting those reference rates which we get at 315, indicative closing of sorts. We'll start speaking about that as well, and we'll start closing down. Another half hour to go, by the way, so we'll play that half hour as it comes. Stay with us here on ET Now. Welcome back, and we're talking markets with Kunal and Narendra. Narendra, if I were to pick your mind with regard to how you're seeing the sugar story unfold, that's one of the stories that has unfolded through this week. Lots of ups and downs. How are you looking at it now? Narendra, I believe you're on mute.
Yeah, I think I'm here.
Yes.
Can you hear me?
Yes. Now I can.
Yeah, I think the rally has been very sharp in the stocks, and yesterday we have seen a very sharp run up in the stocks. However, having said that, if you see global demand and supply situation and the domestic trends, so right now the stocks which used to remain in upwards of 50,000 number is now hovering at around 43,000 kind of number, and which is a very alarming level, and hence the government has allowed the import of sugar. So this should keep a tab on rising prices. And it being sugar a very cyclical sector and lot of intervention is there from the government side. So we can continue to see more remedial measures from the government in order to check the prices. So from that point of view, I think the volatility would be much higher going ahead in the space, and most part of the rally, or you can say the improvement in the realizations for these companies have been factored in by the markets on part of both the sugar as well as ethanol story.
Okay, Narendra, what is it that's standing out for you in a market like this? What are you recommending for your clients?
See, right now, nothing much shift in our stance from a quarter or so. So we continue to remain positive on auto ancillaries as a space, and following up with defense space. However, valuations are not very cheap in the defense space. But as and when markets gives us an opportunity, we continue to chip in a few stocks in the defense space like Bharat Electronics, HAL, Solar Industries kind of stocks. Now, especially in near term for next 2 or 3 months, as we are going to see start of festival season. I think durables is a space which can be looked at from that perspective, consumer as well as durables, as we are entering into the festival seasons. Apart from this, metals is another space, especially non-ferrous metals, stocks like Hindustan Copper, kind of stocks wherein we are very positive, and we should continue to see improvements both in terms of profitability as well as volume growth for next 2 to 3 years. Also, the international supply and demand scenario is favorable for the copper space. So these are the sectors we are positive, and apart from this, financials, especially NBFC companies, we are very positive, and the gold financing companies are the ones which we again can see some run up in near medium term.
Okay, just give us a sense, Narendra, very quickly. Actually, I'll take a bit of a pause. Sneh is in fact standing by. The Nifty FMCG stocks, they're under pressure as palm oil prices have hit a 20-month high, crossing the 5,000 ringgit a ton mark for the first time in this cycle. Higher palm oil costs could obviously pressure margins for companies like GCPL and HUL, Bikaji, among others. And Sneh here to break this down for us.
Well, yeah, so the Nifty FMCG index is under pressure and continues to be the top losing index in terms of sectoral moves today. The trigger is that palm oil prices have risen to a 20-month high and they've surpassed the 5,000 ringgit, that's the Malaysian ringgit per ton level. Palm oil prices are now at 5,119 Malaysian ringgits per ton, and the Malaysian Palm Oil Council says that palm oil prices are expected to stay sticky at least above the 4,600 Malaysian ringgit per ton going ahead, especially in September. The reasons behind this is tightening supply, rising Indian demand, as well as favorable biodiesel economics, where a lot of palm oil is being diverted to in Malaysia. So if I take a look at the palm oil moves on a month-to-date, 1 month, 3 month basis, the moves are anywhere between 8 to 9.5%. That's the kind of spike we've seen recently in palm oil prices. In terms of Malaysia's palm oil production, expected to peak in September and October, but the production could then dip on a year-on-year basis over the remainder of Q4 of calendar year 26, and then supply could start tightening towards the end of it. The other big reason is India's shift from vegetable oil to palm oil right now because of all the geopolitical disturbances we are seeing. There is a shifting demand between from vegetable oil now towards Indian palm oil, and India's July edible oil import, it is at a 10-month high. So we're already under pressure because of rise in prices, and our exports are also going up. According to Solvent Extractors Association of India, palm oil has been the highest in 5 months in the month of July, the kind of imports that we have done. Lastly, let's also talk about how FMCG stands to be affected and the Indian company's dependence on palm oil. HUL uses palm oil and its derivatives for personal care and home care products, and then palm oil makes up 15 to 20% of HUL's raw material cost. For GCPL, 30 to 35% because they are a major soap player, and palm fatty acid distillate is used to make soaps. Dabur, Britannia, Nestle, Bikaji, all of them continue to be under pressure because palm oil makes up as high as 50% of Bikaji's raw material cost. For Dabur, Britannia, Nestle, it lies between 10 to 15%. So that's the reason why FMCG stocks and the entire index is under pressure today.
Okay, thank you so much for that, Snehi. That gives us a good picture of what's playing out. If I can switch back to you, Narendra, with regard to Hindustan Copper, trades at around 47 times. Of course, copper prices have held up beautifully, and my guess is that they will continue to do so, is what you are building in. But what's the risk here to the thesis? And of course, the expansion plans also are solid. Did you believe that executable?
Yes, definitely. See, there are two, three kinds of tailwinds which is going positive for the stock. One is, of course, the expansion plans, aggressive expansion plan, wherein the company is targeting to double its capacity by 2030. And the second is, if you see the overall inventory in the LME and as well as SHFE, that has squeezed further, and that has added to the already weak supply. So the prices are firmer, and there are expectations that further price hike may come in. Also, if you see the global shift towards renewables as well as so there is a very high demand which is expected to go for the copper, especially the data centers, and there has been a very strong demand coming up from these kind of new spaces which is coming up. So from both one side, the supply is coming down and inventories are coming down, and on the other side, the demand is continuously increasing for the consumption of the copper. And with the addition of the new capacity, and new capacity is coming just in time for the company, would have further add to the tailwinds of the company. Hence, we continue to see a good traction for the company, both in terms of revenue as well as profitability.
Okay, that's interesting. From the metals pack, Kunal, would Hindustan Copper feature?
Yeah, it's done reasonably well. I think there was a point where Hindustan Copper did exceptionally well start of 2026, and then on the back of correction in the commodity-based asset classes, silver, gold, copper, etc. In the past, for 4-5 months, these stocks had also gone through like a 15%, 20% correction. Hindustan Copper, I think, had recently come back towards 530, 540 mark, and now it's coming back again towards its swing up move. So chart pattern wise, it looks attractive on the short term bet, but then you'll have to always keep an eye on what's happening on the base asset classes and whether the trend over there sustains to be on the upside.
Okay. Now, we spoke about EMS briefly, and exclusive sources are telling your channel that the government is preparing to widen the scope of its ECMS, which is the Electronic Component Manufacturing Scheme, with more components likely to be brought under the incentive framework. The Ministry of Electronics and Information Technology, or MeitY, held discussions with industry players including Keynes, Amber, Syrma and Samsung last week to identify additional modules and components that could be included. Sumita here with the details.
That's right. In fact, exclusive sources have told ET now that there could be a possibility of the government likely looking to expand the scope of the electronics components manufacturing scheme. And this is essentially aimed at covering more components under the scheme. And in fact, in this regard, we're given to understand from sources that the IT ministry and representatives from the IT ministry had discussions with the industry a couple of days back, and industry players included representation from Keynes, Amber and Syrma, amongst other companies. And in fact, they held discussions with government. These discussions focused on identifying additional modules and components that could be added to the scheme. So in terms of the components that were discussed, well, battery management systems, PCB drill bits, CCTV enclosures and materials could be some of the components that, of course, were part of the discussions that the industry is seeking to get included. In fact, the industry is also seeking a longer gestation period for PCBs, citing extended production cycles. In fact, what sources have also told us that the scheme could be reopened to invite fresh applications for these additional components. And with regard to that, the government may issue an addendum to expand the scope of the scheme. Remember, in July 2026, an addendum for optical transceivers was notified. Now, as far as the ECMS is concerned, or the Electronics Components Manufacturing Scheme is concerned, well, it was notified in April 2025 with the 22,919 crores of financial outlay, which was later expanded to 40,000 crores in the union budget to accommodate the massive industry response. In fact, there is room to accommodate more companies and bring in additional components under the scheme, under the expanded scope of the budget. As of now, at least 106 applications covering 30 products across 15 states have been approved.
Okay, thank you so much for that, Sumita. Very interesting and plenty playing out over there. And we'll continue to talk to managements to give you a better perspective of what's happening. But Narendra, coming straight back to you, the big debate at this point of time is, should you go out and buy large cap private sector banks? And if so, how should you play it? One, if you're initiating a fresh long, is this something that you would be positive on from a 12 to 24-month perspective?
I think overall we are positive on banking sector. If you see on an average, the credit growth has been very good consecutive. Last month it was 17. This previous month it was 18. So this has been a very good number. However, in terms of private banks view, we are not very positive, especially in the very short term, because the banks are lagging behind their PSU counterparts. Having said that, in other side, we do not see any major downside as well. So there is no there is very minimal downside risk. However, a very sharp rally or re-rating happening for private banks immediately in a month or so is very unlikely. However, we are into a consolidation phase, and we definitely see a positive things improving for the private sector banks in a quarter or two onwards right now. So nothing immediately positive, but yeah, we are on a trajectory of improvement, seeing in the private sector banks, and we like ICICI Bank in the private sector space right now.
Okay. Then would you therefore play through some of the smaller banks, and what are your favorites within the pack?
The large caps, ICICI is one of our top picks, and apart from ICICI, we have SBI and the PSU pack. So we would like to play a mix of both private as well as PSU plays, wherein ICICI would be our top pick from private banks, and SBI, Bank of India, Indian Bank would kind of names would be our top picks from the PSU pack.
Okay. And Narendra, also curious to know, how should one look at consumption at this point of time? Snehi was just giving us that update with regard to palm oil prices. Would you be worried?
We have to see. Definitely, what we have seen is that a few quarters back, the raw material costs have impacted the margins of the company, and following the GST 2 implementations, the company has taken a price hikes, and we have seen that the demand has been steady and gradually picking up. So most of the price hikes have been taken up by the company, and now another spurt of raw material inflation would definitely add to the headwinds and eat up the margins of the company if it remains sticky. Having said that, I think from the volume perspective, we are on a positive path, and since we are just entering into the festive season a fortnight later, so I think the volume growth should the momentum should be maintained, and we have to keep a watch on how the raw material cost inflation is going to impact, and especially is it just a short-term phenomenon, or it continues to stay. So definitely, if the palm oil prices remains high for a longer period, so it has a potential to impact the margins of the company.
Okay, all right. Let's also quickly pull up some of those stocks, see whether there's an impact. 30 seconds to close the cash market, at least in trade today. We're absolutely flat on the Nifty. No real moves seen. The cash trading session also not seeing any significant move, at least at a net level. So you're largely seeing a flattish kind of move. Well, Grasim is down 1% in the cash segment. Last 15 odd minutes is what we've seen that in terms of the move. Nestle down around 4/10, HDFC Bank down around a third. So those are some of your movers over the last 15 minutes or thereabouts. SBI, that one's down. That one's up 0.75% over the last 15 odd minutes. So you're seeing some good strength build up over there. In fact, stock turning green as a result of that. Some of the big gainers of the week, I also want to quickly flag those out because we've closed the week as well. And HDFC Life is your top gainer, 3.5% move on HDFC Life, Eternal up 3% as well. Kotak Bank, Power Grid are just some of your other gainers in trade, for the week gone by. Kunal, I wonder from within the private banks, is Kotak Mahindra Bank staging a bit of a comeback? Last few days I've seen that there's been some good moves coming on that stock. Trying to understand whether that can sustain.
Yeah, I think, Harsh, we remember, I think a couple of days back I mentioned that the private sector banking stocks, few selective ones like Kotak and Axis Bank, they are the ones which are looking attractive, specifically on the back of, two reasons. One, that the indicators were deeply oversold for the stock prices, and that the stocks had tapped back into a strong support territory. I think around 385.90 approximately. From there, Kotak Bank has moved on to that 400, 405 mark. I think today's high was around 405 odd levels for the stock price. It's cooled off from the intraday highs. The candlestick pattern is not attractive today. For example, what's formed for Kotak Bank on closing basis, we call this as more of a doji pattern, and this could probably indicate that maybe I think for the next couple of days the stock might see slight bit of a cool off over here. But I think as a process, what we are seeing is that many of these private sector banking names are tapping back into their strong support territories and then seeing that odd 5%, 7% swing. So it's always better to try and wait for these stocks to come back into that support territory where the risk reward also originates to be a lot more positive.
Okay. And Kunal, anything that stands out for you in terms of the moves on the gas last 15 odd minutes? I'm not seeing too many strong moves, even though there has been some bit of a uptick that we are seeing, and there is some bit of choppiness as well. But your take?
Yeah, I think, for example, Crompton has done decently well. It's shown that slight bit of an uptick in terms of cash. Bank of Baroda, I think, has shown that slight bit of an uptick, so far what I can see on the charts, in terms of closing. So few odd, very odd kind of names. It doesn't emerge as like a theme which is playing out. I think what's going to be very, very important is day after tomorrow, which is Tuesday, because it's going to be the first expiry on the basis of cash. And we all know that expiry, the last half an hour, is very, very crucial for the markets because a lot of positions get closed, rollover, etc. They generally tend to happen. So I think the Tuesday is going to be more important than the odd days.
Okay. Narendra, if I were to ask you for some ideas, some stock ideas, I know you're not doing much, at least when I asked you on sectors. You said that it's all status quo, but any stock ideas that you have?
Right now, in textile sector, we are looking at, and it's look interesting. So, Gokaldas Exports is one of the stock which can be looked at, especially the company could benefit from the UK FTA, which is going to be implemented this year. And apart from this, as I said, Hindustan Copper is another idea which we are looking forward to, and we are Scientific is another idea. This is into a CDMO player, and it has tied up with 15 products with the companies like Pfizer and GSK. So which is coming up in next few quarters. So we see good amount of revenue growth as well as EBITDA growth happening for VR. So these are the top three stock ideas for next medium term.
All right. Also curious to know what the view, Narendra, on some of the big buzzers of the day is. Welspun Corp was one of those big buzzers, and management commentary also coming through that they are in talks for more orders, of course, yet not converted. What's the take there? And this 14% kind of move, how much does it build in?
Right now, Welspun Corp is not under our coverage and do not have
Okay.
any active recommendation. Yeah.
Understood. Anything from within the renewables pack that you're focusing on, Narendra, at this point?
See, renewables, we continue to like Wari and Premier Energies, and however, we are into a consolidation mode, and the ASM stage two, which is the policy is which has just shifting. So we are into that shift phase, wherein the companies which are more backward as well as forward integrated would continue to be relevant companies, and the companies which are just into the assembly of the modules would be seeing pressure in their margins going ahead. So these are the two plays which we are playing, and in renewables, Vari and Premier are our top picks.
Okay. And, what about some of the platform companies, Narendra? What's the view there? Eternal, Swiggy, Urban Company, and the like?
The Eternal definitely we continue to remain positive, and especially from the LinkedIn point of view, we continue to see the momentum to be maintained in the growth, and we continue to we are very positive on the Eternal as a overall business.
What about some of the names from the broader end? A car trade, an urban company, a Paytm not so much broader, but a Meesho, for example. Any of those names that you track, and even if you can give us a sense on one of those as to how you're seeing the journey?
See, we are closely monitoring the space. However, Urban Company and Car Trade Tech both are not under our active recommendation list. But we are very positive on the overall new age tech stocks, and we are very closely monitoring the space. And overall, the space is looking interesting as we see a continued high volume growth coming in this space, and the margins should also follow later on. So the growth is very interesting, and the business is expanding at a very fast pace.
Okay, all right. What we'll do is go across to Snehi. UBS had initiated coverage earlier today on Urban Company. Buy rating is what UBS has initiated at. Target price being 180 apiece, so still some upside to go despite the 8% move today. Brokerage believes India's largest online home services platform is entering its next phase of accelerated growth. Snehi here with the highlights of that note.
Absolutely. So stock in focus today is Urban Company doing well in trade on the back of a very bullish note coming in from the house of UBS, wherein they've initiated a buy rating with a target price of 180 rupees per share, implying the 22% upside to where the stock is right now. They say that Urban Company is India's largest online home services platform with 8.4 million users. They see net transaction value growing from 43 billion in FY26 all the way up to 100 billion by FY29, implying a CAGR of 32%. They say that India's home online airline service market is entering its Blinkit moment, and they also say that urban companies are at the forefront of this evolution. They are also saying that company has a head start against its peers, Snabbit and Prompto, because while their peers are also launching other categories, urban company already is an established player in all those health services and beauty services category. They say that right product market fit, strong balance sheet, and the execution track record that urban company has with a clear focus on unit economics is a key positive for the company. And they believe that the market is not fully appreciating India's home services growth acceleration. For InstaHelp, they expect break-even even earlier than what the company has indicated, and they see home services segment growing at a 20 to 25% CAGR all the way up to FY31. They believe that urban company can reach its target of 10 billion rupees adjusted EBITDA by FY31, and they estimate a total addressable market, a TAM of 22.5 lakh crore rupees, with FY31 penetration levels even below 5%, which means there is a lot of legroom for urban company to grow ahead. So for all of these reasons, UBS has initiated a buy call on urban company with a target price of 180 rupees per share.
Okay, that's the take with regard to urban company. I wonder, Kunal, how you look at some of these names?
Yeah, I think it's now developing to be a decent chart because, the stock which was earlier languishing around the 130, 135 kind of a trading range has now moved back towards 155, 157 mark as a breakout. In the process of today's move, the stock has crossed back above the 3-month swing high. So we call this as a swing breakout on the short-term charts, which typically is considered to be positive for the stock. I would believe that now this opens up further headroom for urban company on the higher side, because when you see weekly, monthly charts breaking out in the back of higher volumes, that generally should augur very well for the stock. So which means that now this could be a very interesting play from a positional time frame. I think urban company should be looked at from the current perspective.
Okay, all right. That's with regard to urban company. Narendra, some of the core consumption names, I wonder how you're looking at them, and how should one play consumption at this point in time? Is auto still the theme to play consumption?
Yeah, definitely. Auto can be one of the things, especially two-wheeler space is very interesting. And in two-wheeler space, we are more positive on the stocks like Bajaj and TVS, wherein both these companies offers both the legacies as well as options into the EV, which is another high growth segment. And we expect that the incumbents should be driving the growth in the EV space as well, and would be taking a major market share. So auto, especially two-wheelers, and following that, the auto ancillaries like Minda Corp, Uno Minda kind of stocks should continue to play for next at least 2 to 3 quarters.
Okay. All right, Narendra, we'll let you go. Thank you so much for joining us this afternoon. Kunal, we'll let you go as well. Thank you for all of those views, and viewers completely timed out on this edition of Closing Trades. Thank you so much for tuning in. Stay with us. More action on the other side, but it's a goodbye for the moment, for the day, as well as for the week. Thank you so much.